TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials down 641. You get the Nasdaq off 249. S&P's off 70. Gold contract up 1470, trading at 1657 an ounce. Silver up 7 cents, $17.90 an ounce. Light sweet crude, you talk about getting hit, down $2.25, $46.48 a barrel. And as usual, folks, notes and bonds. You get the 10-year note right now up 14 ticks, 133.25. The 30-year up a full point, plus 3 ticks at 169.06. And King Dollar down 516 ticks, trading 98.480. Euro is at 109. The yen is at 109.92, and the pound is at 128 to $1 US. Tom O'Brien, what's going on?
Good Thursday morning. We kick off right where we left off yesterday, man.
Pretty intense, no doubt. We got to go to the 10-year first, folks. Okay, because guess what? You know, this is we're in an ABC structure on the way down. You know, we've been talking about these are straight line moves, and boy, this is about as straight line move as you can get. Pretty intense. We've got down to 1.24 this morning, and what you're going to see here, and this is where you're getting away from where the breakdown came from, or the breakout. It's higher price and lower yields. But what you're going to see here is that the last low that was established out here was 1.3180. That was in July of 2018. Bottom line is that, man, you've broken this with conviction, man. So
yeah, we left in the dust.
Yeah.
Seriously.
It's still hard to comprehend that, what this price projection is, but this price projection is just about zero, folks. So we may be there much quicker than all of us realize, no doubt. So we get over and we take a look at the S&P. What you're going to see inside the S&P is that, you definitely broke the uptrend with conviction. I mean, this is about as intense as you can get. We're talking about, you're talking about 5 trading days. Now you're back to November 1st, basically October 31st. And my take is that we're going right down to this 28.85. That's, it's unusual that you get there without stopping, but.
I said this morning, I did the program at 8:30. So when I load up charts on the Thinkorswim platform, when you put it on a 15-minute just default, it goes back about 5 days. Just that's their default setting of their 15-minute chart in terms of how many bars it puts on. And that includes the all-time high in the S&P at 33.97, man. Remarkable when you put in that type of context, right? Down 350 points. It's not often you put a 15-minute chart. You say go back 5 days, and you have like a 10+% correction in there going back to that 33.97. And that was about exactly a week ago. It actually correlates to Wednesday night of last week at 9 o'clock, all right? But still, you back it up exactly a week, and we're trading at 33.89 in the S&Ps. We're down 10% from that number. Fast forward 5 trading days.
All right. Now, and the danger here in the S&P, I have the cash up right now. It's just 3055. Well, if you get back inside 2940, it puts game on all the way, which would be a mind blower, to the correction that was in December of 2018, which would be just pretty intense, man. But guess what? It is what it is, man. I mean, you get back inside those areas, and you got to watch out, because the bottom line is that there's some intense selling that's going on. And being a Thursday coming into Friday, don't expect miracles coming into a Friday in a bad week, folks, Yeah,
I actually thought today, just speculating completely, right? But today on the open might be the time that you get kind of a nice bounce coming into whether, to put things in context, right? We had the press conference with Trump last night, 6:30 p.m. Eastern time. Just remarkable. I don't think you can overstate how remarkable it was that press conference finished, and literally within minutes, I'm not sure if you were watching, Tom, I was watching, the headlines popped up, that the press conference finished, and within about 100 seconds, the notification popped up that the first patient of unknown origin, potential community spread. I thought that press conference was supposed to be a briefing from the president. What's going on with the coronavirus? How can you be prepared? Where are we right now? It finishes, and we get that news 2 minutes later, and the market probably said the same thing because we took off to the top, to the bottom side, downward, and it's just remarkable that comes out at the end of it. And you have to say, all this speculation, you can't trust China, you can't trust Iran, right? How do you have a press conference with every top official, the president, now Pence is going to be put in charge of it, Health and Human Services out there, the CDC, and they wait until they're off the podium, can't take questions, and that information's released, man.
Well, I'll answer that question for you.
I think
it's pretty easy because the bottom line is that
it is.
Trump lies on a continual basis, okay? The difference here is that the folks that basically don't care, and it's all about money, now it's going to be about your health. We'll find out what people care. I mean,
it's one thing, that's right. It's one thing putting being a cheerleader for the economy to all end and lying on that regard and lying about what's going on. But you can't do it when you're talking about something like this. And so it was quite a wake-up, man. The market woke up. And then the other news story out there, I don't know if you saw Japan closing schools down for a month. I immediately said, is that something that's going to happen here? And it's just a month to start with. They don't say that, but they're not going to say we're closing them for 3 months. If this is still persisting in a month, you could easily see that extended. They have a spring break holiday towards the end of March, so they're closing it down the beginning of March through the end. And if this starts hitting America, which in line with the first community spread, is that something that we should realistically be pricing in? And boy, man, when you start getting kids, no school, parents, do they have to stay home? Are they out of their jobs? Are there businesses that are going to, if you're in a huge type of a business environment and you're shutting down schools, are people going to be going into office buildings with thousands of people? The potential's all there, man. It really is.
I can tell you. So personally, folks, okay, the bottom line is that one of the biggest gold shows of the year, right, is next Monday in Toronto, right? I have reservations. Guess what? I decided to cancel them last night. I'm not jumping on the plane.
I wouldn't let you go, man. No way. I didn't have it, but I.
And so what happens here? So picture what happens. The airlines, in this particular case, at least I bought a ticket that I can get. Not to get a refund, but at least it's I can use it.
You get a credit. Yeah, you get a credit.
And the hotel, I get my money back. But guess what?
Okay.
That's economy-wise. I'm sure that's happening all over the place. I mean, this
everywhere.
is,
I agree.
It's a monster deal. I kept going back and forth. I said, do I really want to do this? And then
did you? That snuck up on me. I sent you a text this morning.
Yeah. Did you? Okay. So it's like
I sent you a lot of texts, but that was one of them saying, "Aren't you booked to go to the Gold Show in Toronto this coming weekend?"
Right.
And I wanted to make sure that at least I actually, and this is where it's so remarkable. I thought you were booked. I assumed that we didn't even talk about it because there was no way you were going.
Yeah.
And the only reason I sent you a text was to try and see if you could get a credit. So that's like how obvious it is that travel is definitely going to be canceled for those types of events.
Totally,
it is.
Totally. Yeah. Stay right there, folks. Tommy and I come right back. Dow right now is down 586. Nasdaq's off 224. S&P's down 64. Come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's down 640, Nasdaq's off 245, S&Ps are off 68. And let's go over to Apple for a second. So Apple's taking a little hit out here this morning. You're down 1174. Yes. So the highs out there 327. You're 280, and it's going to be interesting. See, because this is like the first place, folks, that you do actually have some small support. You know, you break 278, and guess what? You're going to be down like into 255, man. Let me look at the Amazon for a second, because the Amazon is the one that's always hard to buy in corrections. Okay, so it's down $63. It's going to fill the gap. That's 1872. We hit 1912 thus far.
You know, I just tying into some fundamentals, man. I was thinking about it yesterday. Apple, really tough to decipher, and this is just total speculation, right? You know that I think they do 15% of their sales, they said, in China. They produce almost everything they make, for all intents and purposes, in China. That effect not quite, I guess, figured out yet. Not yet priced in terms of what. But Amazon, isn't everybody just going to start ordering goods online instead of going to stores? Couldn't they see a huge uptick here? Just something to keep in mind, man.
Oh,
because
it is.
I imagine that, they have groceries, okay? Now, I know that Walmart has groceries, right? Publix does. But if you just think about where people go instantaneously when they want it delivered to their door, they go to Amazon. And
Yes.
if you get a situation like Japan, schools are shut down for a month, people are not congregating, I imagine that Amazon is going to see a rise in what, and they're going to be dealing with, Z in the Den saying warehouses could be hit just as easily. And that's true. They're going to be, and that's the pullback. But I just see them, of all people, your head goes to one place right now in America when you say, I want something delivered to my door, I don't want to go out for it. You go to Amazon.
Yeah. Oh, listen, there's no doubt. And we're in a deep correction. That's the real bottom line. So what ends up happening, like, it was so weird, man. This morning, I'm hearing this analyst on Bloomberg, and they're talking about stock buybacks, right? Now, this always gets strange, folks, okay? Because equities, companies, rather, when they're buying stock back at highs, well, now you get a hit And this person was saying, no, they didn't think they'd buy them back. It's like, what are you, crazy, man? I mean, if you have a budget that you're going to buy your stocks back at, the bottom line is that at some point, I can see them stop buying the stocks back. I mean, if you thought something was good at, all-time highs, well, if you're off 10 or 15%, well, why wouldn't it be good then? Because on the longer range, these businesses will come back, okay? On the shorter range, folks, is a good year. We're talking, you get a cash flow disrupted like this, it's a big deal.
I mean, the S&Ps, I talked about in the morning market report on TFNN, the front page this morning, but the S&Ps, even this day, kind of changing things even. So the S&Ps are within about 10 points of where we were at in July of 2019, all right? That was 3,029. The high back in there of May was about 29.61. And if you back things up a little bit longer for a 3-year weekly, because I want to go back, the January high of 2018 is 28.76. I mean, you're moving 70 S&P points to 100 a day. You're almost back 2 years. Now, I mentioned that because in the Dow, check this out, right? We are back now, and we're below. I mean, the high, 26,149. We're basically back more than 2 years in the Dow. We're back to January of 2018. We went all of 2018, all of 2019. What happened in 2019? 30% gains, right? Well, guess what? We're back to the beginning of 2018. Remarkable.
Right. And, let's pitch this to someone that's your age, Tommy, right? So plenty of people your age have never seen a correction. Now, you were around for the downdraft, okay, because you happen to be in the business, okay?
Yeah.
But when I was thinking about this morning, this is really important to understand, folks, is that let's say that my take is like once you get like 30, you start dabbling a little in the market, you know what I mean? 30,
sure.
So picture it. Was plenty of people that are your age that it was the crash that started. Well, since the crash, we've gone up. I mean,
I agree.
And that never happened like when I got in the market. You know what I'm saying? Or,
sure.
Because we've never had a run of like 10 years without, major corrections. You know what I mean?
Sure.
And most of the time, folks, a major correction, it's whether it's 3 years, 2.5 years, you know what I mean? You'd go that long, okay?
Yeah.
But look at this thing, man. I'm going back here. So in March of 2009 was the low. Well, you had the biggest blip that we actually had was December of 2018, October to December. Other than that, it's like, well, hold it. I should be able to wake up every morning and my portfolio is going to be worth more money. So,
Yeah. I mean, and when you start talking about, industrialized nations like Japan, man, shutting down schools for an entire month. And as I mentioned, that would be the start. I don't know, even if behind the scenes they're saying that a month's not going to do it, this might be, it's still going to be around in a month, they're going to start with a month. So be aware that that could easily be a plan. We'll address it. We'll extend it if we need to. A month is a long time. I don't know how a lot of families, right? Other people, you're going to have to take off jobs. You're going to have to hit your hourly wages. That's money you're going to spend in the economy. Again, difficult to overstate the impact if you start shutting down. And that was elementary, junior, and high school. All schools in Japan for an entire month.
And, I mean, I think most of us understand how important education is in Japan. I mean,
definitely.
That's what I say. That'd be the last thing they'd want to do, folks, okay?
That is on par with America in terms of super industrialized nation, right? Education, first world country.
No doubt. Let's go to Victor in Paramus, New Jersey. Hey, Victor, what's going on?
Not much. Larry always had that smart guy on. He was talking about a 72-week cycle, and the cycle high was February 14th. So if you go 72 weeks out, that's when the approval for the virus will be 72 weeks out. So it kind of makes sense we could be going out for 72 weeks.
72
and
weeks.
Sell any bounces.
Yeah, I don't.
You know what I mean? Because we just passed the 618 from October. If you put it on retracement. We just blew through that.
I've been in a lot of corrections and a lot of, depressions. 72 weeks. The market cleans itself out a lot quicker than 72 weeks. Sad but true.
I mean, there could be the bottom there in 72 weeks because if everybody's living on its fear and they actually come out with that, whatever, to take care of you. The guy on the TV said 2 times already it's going to take 1 year and 4 months. So that's about 72 weeks.
Yeah, well, I think the cool thing, there's nothing cool about people getting sick, but the cool thing, let's say in the marketplace, right? when you're looking at this, folks, okay, if you've liked the company, what you should do is analyze it, like when Tommy's talking about Amazon, whatever company you like, you should really analyze it, because things are going to change again. Do you know what I mean? Yeah. So if you analyze a company like that, right, there's going to be buys out here that you should buy. That's my take on it. Do you know what I mean? And I'm always the biggest bear around. But I'm telling you, man, this is an opportunity that if you like a company, man, you might take some heat. But guess what? The world's not going to end. There's problems, but there's.
What do you do if you're a fund buyer right now?
A fund?
End of the month.
You wait a little bit longer and buy the S&P. I mean, the SPY, you get almost zero expenses. You wait till you think it's there, and put your hand over your eyes and hit the button, man. Stay right there.
Thanks,
Tommy
Victor.
and I come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Natural gas. So natural gas, folks, fell 143 BCF. The median estimate was 158. And maybe you can pull up natural gas, Tommy, and see where we're at here.
I sure will. Let me jump over. We'll pull up that natural gas. I'm going to close out crude oil. Crude approaching a 45.
Oh, we got to pull that up, too, yeah.
Approaching a 45 handle. We'll give that a little teaser before we jump away. We'll jump back to it. But natural gas, I mean, these markets, man, just remarkable. I can't help. I was looking at them over the break. So natural gas right now, we're looking at the April contract, quite a little drop-off on that news. So we were trading at about 175. We've dropped about 2 pennies, 172.8.
Wow.
Right away on that number.
And so I'm going to put up the generic one. A generic one, folks, you can basically put it back as long as you want, because I think $1.61, we did this before, and I got to go back like 20 years or something, man. Let me pull this up. This is amazing, actually. But
yeah,
it totally makes
gas.
sense. I mean, if they're killing oil, forget gas.
Right.
Okay, I got to go back 50 years. This is crazy, man. Okay, so let's see what we got here. Come on, take your time. I'm doing a quarterly on a 50-year chart on natural gas. Well, maybe I better do 40. Let me see if I can do 40. Okay, so look at this, man. It's $1.39. What's that? Well, $1.71 next. Then we're back to 1995 here. That's what's going on.
Crazy.
1995, folks. Okay, that's pretty intense. Well, and as I'm speaking, I guess we better go right back to the S&P, because
I was waiting for it. I was looking at it. We might get a 2,900 print, man, in no time. We're at 3,016. For context, even at 4 in the morning, we were at 3,103. So you're talking about 90 S&P points from 4:30 in the morning, let alone the slide we've had from almost 3,400, and it's dropping fast, man.
Yep. It's
we're down 100 points in the S&P almost. Wow.
Right. And if we go into let's just look at the Dow and see what kind of a beaten.
And my guess is it's a lot of what we've been talking about this morning, people talking about pricing in the same thing, you know? I mean, you can't price in this type of destruction if we really have to shut down our entire national school system for a month or two.
Right.
That is almost impossible to get priced in a day. And so I think we're seeing just that continuing to try and, get the market trying to get their hands around something that we haven't. Have we ever seen that? Not in my time.
No. And the kicker is, you had brought this up on your program this morning too. So the kicker, folks, goes like this. I was looking at even the first day, one of our tigers called in and was explaining that, the flu, how many millions of people get the flu in the United States, and versus how many die.
Yes.
The statistic is a monster, folks, okay? But the statistic of deaths is 0.001. But there's so many millions of people that get it that a lot of people die. Okay.
Yeah, it's about 1 out of 1,000 to put that 0.1%. Right. So 1 out of 1,000 to put it in an easily. Yeah.
And this one here, it's 1%. It's a different, and you don't have a vaccine yet. That's what I think the market's looking at.
It could be 1%. It could be 2%. Probably in a country like America, the mortality rate going to be far below maybe where it is. We have a quarantine in China. But nonetheless, I mean, another way to compare those statistics, right, and not to send scare, but just to be aware, flu mortality rate about 0.1%. The coronavirus, from what they know so far, maybe call it 1%. That means it's 10 times more deadly. I mean, there's ways you can shift percentages, but that is the fear, man, because if you do get where I think the high end of the CDC estimates is you're going to get about 46 million people with the flu. You might get as high as 46,000 then. That would correlate deaths. I mean, not a lot of people. I did not know that number before we started talking about the coronavirus. I did not. You always hear about whether it's the elderly, unfortunately, weakened immune systems, children, that they're hit especially hard from the flu. But if you get 46 million people that get the coronavirus and you still have a 1% mortality rate, that's 4.6 million people. That's the scary part. If you even cut it in half, right, it's 2.3 million. So, and what Victor was talking about, so the press conference last night, if people didn't check it out, they had the Secretary of Health and Human Services talking about the vaccine and kind of putting out that even when you fast track something, it is not something that maybe is weeks or months. And what I took out of that was that it will not be something that will address the spread right now if it hits America. In a year, next year, probably something that we'll have under control if it becomes a seasonal issue. But it's not going to be something that really addresses it right now as it spreads, if it spreads right now. So it will be okay in the future. But in terms of how it hits this one season, that's why you might see those types of drastic actions taken to shut down schools. I mean,
no doubt.
Yeah.
So if we look at the S&P, just so we can give you these numbers, folks, okay, now the S&P is down 102. So the limit down for today is 28.97. So that's still quite, that means you almost are going to be down 200 and something points in the S&P. We just got a couple questions on that. Let me go look at the Dow Industrials. So, it won't give it to me on this one. Okay. The NQs, let me go this, I can go into the futures. Let me go the NQs, though. So the NQs are down 300, and you're at 85.50. That's a long way to go, too. That's 82.59. So hopefully we won't see that, folks, because that is one monster number, man.
And you know what I wonder, too? I think what happens, we'll have to get into it. We're going to have a break coming up. I think that's the futures, limit up, limit down.
It is.
When you actually get into the actual exchange, 7% is where the circuit breakers ring. You got 15 minutes. 13% would be the next 15-minute break if it's less than an hour left in the day. I believe they shut it down right then. But if you happen to be early enough in the day that you can take a 15-minute break after that second 13% drop, the next one will be 20. If it does, let's hope not, ever hit 20, they do shut it down for the day. So 7, 13, 15-minute breaks on each of those, 7% and 13, and then 20% ends it for the day if they're not within the last hour. 7%, my goodness, man, if we get 7%, that is just on top of the loss we've already had. But you just don't know when this type of volatility and this type of effect is coming out.
No doubt. Let's go to John in Michigan. Hey, John, what's going on?
Hey, love your show, guys. Love to listen to you whenever I get a chance.
Hey, John.
I wanted to talk to you about the stock market in relationship to a theory that's going around, is that the virus is only part of the problem, that the European and Japanese bond markets have been destroyed. And at this point, in Europe in particular, if you look at the euro, ever since Sunday, money has been flowing out of the dollar back into the euro, and the Europeans, the theory goes, have really been driving this U.S. market. Or, I hate to use the term foreigners. I don't want to sound, like I'm putting people down, but
it matters coming from where you come.
Running this market up, and now with the scare of the virus and the fear that Europe is on the verge of a total, same thing with Japan, like you guys were talking about, closing businesses and schools closing schools for a month and people not going to work.
Yeah, stay right there.
We should take a look at the euro and see if that is valid. I'm looking at a chart.
The euro wants higher price.
That's a good question. Perfect.
Stay right there. Tommy and I come right back. When we're talking euro, we're talking Europe in general. Dow down 834, NASDAQ off 319, S&P's off 88. We'll come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now down 800, NASDAQ down 305, S&P's off 88. We're talking to John from Michigan. We're talking about Europe, the euro. So watch, folks, what happens, like this euro, John, no doubt is got a huge bid out here today. We just went from a price point of 108 to 110. And that has broken the downtrend that had started out there December 31st. That says the euro's going to go back to $1.12. Now, that's technically, fundamentally, watch how this works, folks, is that, let's say your large funds, even just individual investors in Europe, well, if you sell the U.S. stock market, you're in dollars. The real question is, you're going to keep it in a dollar account or you're going to transfer it back to euros. And you can see the dollar is down 610 ticks. The euro is up 124. Bottom line, if you're transferring it back in, guess what? First you sell the stock, your broker-dealer sells the dollars, they buy your euros, and there you go. So that's what you see happening simultaneously here also in the marketplace in general. Do you know what I mean? So, it looked like the euro should have bounced anyway for a long period of time, but you can see that if you're in Europe and you're selling stocks, the bottom line is that you're going to want your euro back. So I suspect, this volatility is going to continue. And the same, what you have in Japan now, it's just, the same type of deal. The Japanese yen is basically, it had a failure, getting weaker. And right now, this morning, it's just coming back inside its lower range again. 110.29, and we're at 109.77, gets you the beginning of back inside the lower range. So.
Hey, Tom, can I throw something in here?
Yes, absolutely.
Now, if you look at the time that the euro exploded to the upside, it was Sunday night.
Yes.
And the theory carries this with it, that when Bernie Sanders wiped out everybody in that, what do you call it?
The debate?
That little primary they had in Nevada.
Oh, Nevada, yes.
That's when foreigners really freaked out. And as soon as the market opened on Sunday, boom, they sold off the Asia, Europe went on down, and the euro started its climb, the dollar started its decline. So that's part of it also. So you got the virus, and you got foreigners afraid that Bernie Sanders is going to lead the United States away from capitalism onto socialism and communism.
Yeah, well, what would end up happening there is that you'd have to have the Senate go, the House go with it. My take, and it's so intriguing about this one, my take is that if you actually stay with the fundamentals, like the market, remember we were talking about last week when Tommy and I were on, we talked with Kevin Hinks, and the market keeps crawling. The market pays attention, or doesn't pay attention, and pays attention until it does.
Right.
This is the same... the factories were shut down. You had the Lunar New Year. I mean, this was out there. And then it seems that people always think that, okay, why does this happen? Well, the market finally paid attention, And it's a dollar and cent deal, man. You know, we'll see, you know, how the deal is going to shake out politically, but it's definitely a dollar and cent deal. You know.
And you know, Tom, politically, with the virus, I'm also hearing that, you know, this could be another bullet to try to take out Trump, you know, that
oh, that's crazy, man.
They're not doing enough about the virus, and like Tommy said earlier, as soon as he finished the press conference, bang, it comes out that well, we got a case in California where we don't know how it got there, but it's there. So
can I just interject for a second?
You know?
Howard, John, you have to understand that there's no way that the president didn't understand that news bit was going to be out there last night. And that was my point. That's the frustrating part, is that that was supposed to be a briefing all Americans as to what's going on. And the president didn't tell us that. You know, the vice president that's in charge of it didn't tell us that. The Secretary of Health and Human Services didn't tell us that. I would be hard-pressed to think that they didn't know that that was taking place, and they chose not to talk about that in a scheduled press conference, of all things. So I find that hard-pressed to really lend credibility to those issues. And as far as the politics, I think Tom said, well, if Bernie does win the nomination, there's speculation a lot of the state races will be even more hard-pressed. So I imagine that would be gridlock, if anything, if he gets in. So I would just take a look at this as you know, the market just talking about what if first world nations have to shut down for months at a time, which like I said, I haven't seen in my lifetime. Many people haven't seen in their lifetime. It's just remarkable how the impact, you almost can't overstate that type of an impact. When kids don't go to school, parents have to stay home, they're not working, nobody's at the malls, nobody's going to conferences. It's just, it's difficult to wrap your head around almost.
Sure, it could mean a big recession worldwide, you know, right?
Yeah. At least for a year. It could just be like a blank year, you know, not blank, but it really could. And I think that's what's really tough. When public companies, it's amazing how they grow every single year. And you're going to see a year that's just not going to be, it's going to be an anomaly. And the market's trying to figure out what you put a price tag on a year that's just, Goldman Sachs out today, 0 earnings growth this year when they were looking for like 7% before that.
Pretty wild, man.
And I liked you guys when you were talking about being involved with something like Amazon. Also, Netflix would probably be another one.
It is. Netflix.
I'm not going to the movies. I'll just, stay home and order Amazon and
well, look at this
any
today.
of those companies.
Netflix is up $7. Netflix is up $7 today. It was up $5 yesterday. There's no doubt. In fact, so it's real, man. I mean, you know, it's pretty sick, but it's real.
It is.
It's it's because Netflix doesn't need. Well, it doesn't need manufacturing. It doesn't need anything. Do you know what I mean?
The only thing I'd throw into that is you are seeing some movie sets having to shut down, but Netflix has a library that they'll still get sign-ups, man. They'll still get action, for sure.
Right.
Yeah.
Look at their chart. I mean, you got it up. It's incredible.
Yeah.
Cooking, brother.
Hey, okay, guys, I don't want to tie you up for the whole morning,
we appreciate it, man.
Thanks very much for taking my call. Always love the insight.
Thank you.
Thanks for the call, John. I appreciate it, man.
Have a safe one.
Take care now.
Thanks.
Bye-bye.
Let's go to Stan in Atlanta. Hey, Stan, what's going on?
Hey, I'm looking for the best way to short the financials because I think this coronavirus is really going to cause a meltdown in the housing market. I mean, how much is a house going to be worth if a family member in it dies of the coronavirus? And, you know, they come spray paint the symbols all over the front door and everything. So what's the best way to short financials and housing?
So let's look at this. So this is a great question, by the way, okay? Because what you have is this. The initial, my take goes like this. The initial, depending what cities you're in, right? The initial housing deal, we're not even close to basically a meltdown. And the main reason is going to be because of these interest rates. Meaning that, okay, you know, right now the 10 years at
1.25.
Yeah, 1.25. So as the rate goes down, what ends up happening, Stan, is that people can afford a bigger house, right? Or the same house. That being said, however, and this is where it comes in with exactly what you're talking about, is that then there's going to be the question of what happens 4 or 5 months from now when more people understand it. Because, you know, we happen to be in this business and we're all paying attention. There's plenty of people, you know, that they're not thinking about this coronavirus at all. We just happen to be in the marketplace, so we're on it, right?
Hyper aware.
Yeah. So here, stay right there. We're coming right back with Stan from Atlanta, Tommy, myself. Dow down 658, NASDAQ off 252, S&P's off 70. We'll come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 692, Nasdaq's off 261, S&P's off 73. We're talking with Stan in Atlanta, and he's looking at the housing market as well as the financials. What I would do, Stan, is that I'd wait for a bounce, and you'd want to be all over the XLF. You know, the XLF, okay, the big banks, okay, and 6 days it just went from $31 down to $27.50. You get a bounce out of it. And with light volume, then you're going to have some action. So what happens with the banks, of course, folks, is that the lower the interest rates come, the less the spreads are in the banks. That's the first part. The second part is the issuance of bonds in general. Now, this is this morning they had on Bloomberg that the last 3 days, that's been the first time that there hasn't been an issuance, and I'm talking about of AAA bonds, okay? And years, like just years, okay? So that's a double whammy for the banks, you know what I'm saying? Because
but the XLF is a long vehicle. I'm looking to short.
No, I understand that.
Coronavirus,
well,
the effect it's going to have on the housing market.
That's my point. You let the XLF bounce, and then you sell a chart.
Yeah.
Okay. Yeah. I was looking at FAZ also. It's up like 8.5% today.
That's right, but you know you wouldn't want to do it right now. The FAZ in 5 days just went from $23 to $33. You know what I'm saying?
Right.
Yeah.
I think everybody's thinking about this same problem. I mean, just looking at that.
Oh, for sure, man.
Yeah.
I mean, the lower interest rates go, and if you don't have any issuance of bonds, no one's buying stocks. So, you know, of course, what ends up happening is that the banks can sell stocks, sell bonds. Bottom line, no one's buying anything. Cooking, brother.
Thanks for the call, Stan.
Stay right there, folks. Think of Swim coming up next. We talk about defined risk. I'm Man Basil Chapman, Steve Rhodes, Dave White. Be back this afternoon. Thanks, pal.
Thanks, man.
Go get him, folks.